income accounting. National income accounting deals with measuring the flow of output of goods and services that passes through the economy during a specific period of time. What does it simply mean? National income accounting deals with what recording of the total amount of goods and services that is produced in an economy. What is the level of output of goods and services produced in an economy? That's what national income accounting actually does this on. How to compute the total amount of goods and services produced in a country. The national income. Whenever national income, whenever I make reference to the word the national income of a country, we certainly talk about the value of goods and services produced in a country in a particular year. What is the value of goods and services that Nigeria is producing in 2019 or 2018? That's the national income, the value of goods. That is how much goods and services the country was able to produce in a particular year, referred to as the national income. And there are some concepts in national income that we need to know. So about measuring of national income, we want to measure the amount of goods and services produced in Nigeria in the year 2019, or the first quarter of 2020, or the first half of 2020. There are some concepts we need to know so that we can effectively measure the national income of the country, measure the amount of goods and services produced in a country. And here are some of the concepts. We have the personal income, disposable income, per capita income, we correct that spelling later. We have the gross domestic product, the net domestic product, the gross national product, net national product, and also have the national income, which we have talked about, that is the amount of goods and services produced in a country. So these are some of the concepts that are very vital in understanding what national income. So when you are watching your news and they talk that Nigeria GDP is increased by 20% or by 0.3%, what does this imply? It is that the personal income in Nigeria or the average personal income is so amount. What do you expect? So all the per capita income in Nigeria is $1,000. What does this simply mean to a layman? So that's what we simply want to look at, the national income concept. We have the word personal income. What about personal income? Talk about the income received by individual for taking part in production process. The income received by individual for taking part in the production process. We say production is the creating of goods or making and rendering of services to satisfy human wants. Anybody that take part in this activity, either making goods or rendering services, the person is taking part in production process. The money that is paid to such a person is referred to as the personal income. So my salary to me is my personal income. It is the reward or the money I receive for taking part in production process, that is by rendering services. So personal income talk about the income received by an individual for taking part in production process. Only those that render services or produce goods and they are paid in return, those people are the ones that have said to taking part in production process, and the money received by them is what they are referred to as their personal income. Then we have disposable income. Disposable income. So this is the portion of personal income which is left for spending or saving after personal income tax has been deducted. What do we mean by personal income, disposable income? Disposable income is simply referred to the portion or part of a person's income that is left to spend or save after tax has been deducted. If I am paid 50,000, assuming I'm paid 50,000 naira, and after I have paid my tax, let's assume my tax is 2,000, I've paid 2,000 naira. Then what is left is 48,000. That 48,000 is my disposable income. Like if this is my entire income and I remove this portion as tax, this remaining part of my income is what is referred to as disposable income. The income that is left for someone to spend after tax has been deducted. And the formula for disposable income is this: Y subscript D equals to income minus tax. That's the formula for disposable income. Disposable income equals to your income minus tax. where Y stands for your personal what income. This Y here stands for personal income and T stands for tax. So your disposable income, which is Y subscript D, is equals to your personal income. That's your amount you receive for taking part in production process. As a teacher, the amount I receive for teaching minus the amount I pay for tax. What is left for me is what my disposable what income. Then we have what we call per capita what income. Please look at the right spelling. There's no L. Per capita, there's no what L. Per capita income, there's no what L. Per capita income is the income per head or per individual of a country. Per capita income is the income per head or per individual of a country, and it is obtained as the national income divided by the total population of a what country. The per capita income is the income per person, that's the national income divided by the total numbers of person in a what country. Nigeria per capita income is like, what I simply mean, have you ever shared the national cake? Let's assume Nigeria has 20 billion and we're only 20 in this country. So the per capita income is 20 billion divided by what 20 person. That will give us what 1 billion naira each. So when the national income is divided by the total number of persons in a country, what we have is the what per capita what income. So if Nigeria made the news that we have 50 billion in account or $100 billion and we have 200 persons as our population, divide the money equally to every person in the population, what we have there is what per capita what income. So per capita income is the what total income of a country divided by the what total what population of a country. Like this one now, you add everybody's salary together, divided by the numbers of people in the what country, will give you your what per capita what income. Then we have the word gross domestic product, the GDP. Gross domestic product. Now we're going to the technical aspect of it. Gross, it means total without subtraction. Domestic mean what home country. Look at it too. While product mean what is what produced. Let me change my pen so you can see that very well. Okay. Gross mean what total without subtraction. Domestic mean what local economy. While product mean what is what produced. Now let's define gross domestic product. It's the monetary value of all goods and services produced by all residents of a country within a year. Please take note. We talk about what goods and services produced. We want to talk about national income. The gross domestic product, the monetary value of the goods produced. What is the monetary value? If we produce 500 bag of rice and 200 bag of beans, what is the monetary value if you convert it to money? That's what we could talk about monetary value. That you convert it to money. It's the monetary value of all goods and services produced. Goods and services produced by all residents. We talk about domestic now, so we talk about residents of a country within a year. The gross domestic product of a country, we talk about the what monetary value of all the goods and services produced within an economy by all residents of that world country. Please take note of this word resident, because it will be a key for us to understand other concepts. By what resident? When we talk about resident, we talk about people residing in a country. People staying in a country. For example, the residents of Nigeria are not just Nigerians alone. We have Nigerians here. We have Chinese that are staying in Nigeria. We have Italians that are staying in Nigeria. We have people from different parts of the world that are staying in Nigeria. So when we talk about the gross domestic product, talk about the monetary value of goods and services that is produced by Nigerians that are in Nigeria, foreigners that are what? Nigeria. So for gross domestic product, it's simply talking about the monetary value of all goods produced by people staying within a what country in a what accounting what period, which is usually what a year. So in summary, GDP, which is gross domestic product, is the monetary value of goods and services produced by residents of a country, like those people staying in the country. Now talk about gross domestic product. Look at net domestic product. Net. The first one was what? GDP. And this one is what? NDP. This one is gross. The first one here is what? Gross. This one is net. And what is the difference between gross and net? Let me explain the difference between gross and net. When we talk about gross profit, your total profit without deducting anything, not remove your profit without removing. Why net profit? Talk about your profit, then you subtract some things like other expenses that are incurred during the production process. So we talk about net domestic product. Talk about the monetary value of all goods and services produced by all residents of a country within a year, less depreciation. What is about net domestic product? Talk about the gross domestic product minus what? Depreciation. If you look at this definition, from year to year is GDP. This part of it, the definition is what? GDP. The monetary value of all goods and services produced by all residents of a country within a year, that's GDP. Now look at net domestic product. The next now is to subtract what? Depreciation from the what? GDP. That's why the formula of net domestic product is GDP minus what? Depreciation. And what is depreciation? In general and in accounting terms, depreciation is the wear and tear of fixed assets over time. The wear and tear of fixed assets over time. What does this simply mean? If your father has a car, just as your father bought a car 10 years ago, when he starts the car, when he puts on the ignition, the car, what you usually hear is zzz, a very low sound. A low sound. Then after 10 years, probably, when it has used this car over time, when you start this car, in short, your next door neighbor will be saying, "Papa, no, so please go off your car," because it has wear and tear over time. It has lost its value. It has lost value. So depreciation is talking about the loss of value of fixed asset as a result of wear and tear that results from continuous usage. But in this national income concept, depreciation talking about the assets that are being consumed in the production process. Look at it. In the case of national income, depreciation talking about what? Consume assets during the process of what? Production. When you are producing goods and services, those assets that you would use up, all those that would use up, talk about what? They are depreciating. So the net domestic product is what? The gross domestic product minus depreciation. The gross domestic product minus depreciation will give you the net domestic what? Product. They also have the word gross national what? Product. The first one was gross domestic product. But this one is not gross, look at it, national product. Now I want to talk about gross national product. What will simply mean? Gross national product is the monetary value of goods and services produced by citizens of a country. Look at that first one. Gross domestic product talk about residents of a country. Gross domestic product talk about residents of a what? Country. But gross national product talk about what? Citizen of a what? Country. When we talk about citizen of a country, we agree with me that we have Nigerians that are not staying in Nigeria, isn't it? We have Nigerians that are staying in Canada, USA, China, Dubai. What the gross national product, national, those people that belong to a particular country. Talk about the monetary value of goods and services that is what produced by national or citizen of a what? Country. So it's talking about the goods and services that Nigeria has produced in Nigeria. Then the monetary value of goods and services Nigeria produced in Canada, Nigerians in Dubai produce, Nigeria in China produce. So when you sum up their monetary value from abroad and add it to the monetary value of Nigerians in Nigeria, we talk about that is the word net gross national what? Product. So the total value of goods and services produced within a country plus net income from abroad, that is the goods that your brother in China, the business that is doing, the monetary value that he gets for that he got from that business, plus the monetary value of the one in China brought, plus that one from the one of in Kenya, all of them, you add it to the one we have in Nigeria, that is what we call gross national product. So that one is for national, talking about the citizen of a what? Country. While gross domestic talk about the resident of a what country. For gross domestic product, we only calculate those people that are staying in Nigeria. Is that clear? So those Nigeria outside Nigeria is not considered for gross domestic product. But for gross national product, talk about what? Those Nigerians staying in Nigeria and Nigerians staying outside the world country. That's what we call gross national what product. Then we have the net national product. The net national product is what? Gross national product minus what? Depreciation. The net national product NNP is equal to the GNP minus what? Depreciation. So for anything net, what you simply do, you subtract depreciation from it. From anything net, you subtract depreciation from anything gross. To get the net, you subtract depreciation from it. Then we have what we call, I've defined national income as the monetary value of goods and services produced in a country at a particular period of time, which is usually a year. We have defined that. Then let's talk about some uses of national income accounting. Some uses of national income accounting. Why do we have to start calculating the national income? Why don't government leave us alone? You just live your life, make your money, enjoy your money, take care of yourself, take care of your family. Why do government have to spend money to calculate the amount of goods and services produced in an economy? Some of the reasons is: one, basis of revenue allocation, measure of standard of living, basis of government economic policies, economic strength comparison, knowledge of the overall economic performance, comparison of standard of living of a country with another. So these are some of the reasons why the government choose to measure the national income. They are the uses of national income accounting. Let's take a look at each of them. Revenue allocation. Revenue allocation. They said the information gotten from the national income accounting help the government to determine how revenue generated will be allocated. That is the income that the government get. The knowledge from the national income accounting will determine how the government choose to spend its money. The money that the government receive, how is government going to spend it? We have different sectors of the economy, and each sector of the economy, they have their own return they give to the society, directly or indirectly. So with the information we got from the national income accounting, government can determine, okay, which sector of the economy should we have to spend money on? How are we going to allocate this money that we have gotten from the economy? So that's one. It's a basis for revenue allocation. It also measures the standard of living. National income account is used to measure the standard of living. To measure the standard of living. Look at it. With the knowledge of national income, the government can tell if Nigerians are living very well or we are living poorly. In the sense that, on the average, are Nigeria poor or are Nigeria rich? If our national income, our per capita income, which is the total income of the country divided by the population, if it is high, then the government can say that we have a high living standard, we are living well. But if the national income divided by the population, which is our per capita income, is low, very low, it implies that Nigeria is a poor country. Nigeria is living in poverty, and we have a poor standard of living. Is that understood? Like this picture now, what it depicts now, this is like a person in tattered clothes, which implies that the person has a poor standard of living. So with the national income accounting, the government can know, okay, look at this country, look at our country. The per capita income is very low. It implies that Nigerians are poor. So it determines the standard of living. It's also used as used for policy formation. Government use the information from national income to formulate policies. If the government has received the information from the national income accounting, Nigeria government can now start formulating policy so as to meet the macroeconomic objective. If the national income information gotten that the Nigeria is living in poverty, government will now use it as a tool to formulate policy to ensure that the poverty in the country is tackled. I don't know if you understand. Look at it. The information the government got from the national income accounting, probably the per capita income or the gross national product and the government discover that there's a lag in the economy, government can now use this information that he has gotten to what make policy to ensure that this economy what grows. For example, the GDP. If Nigeria GDP fall by 10%, if Nigeria GDP, the gross domestic product, if it reduce by 10%, what it simply mean that our economy went down by what 10%. So with this knowledge, government can now start formulating policy on how to what increase the what economy, how to what grow the economy. The another use of the national income accounting is that the national income accounting information can be used to compare economic strength between two or more countries. We can compare the strength of two or more countries by just looking at their economic income accounting, by looking at the accounting statement, the national income accounting rather. If you bring USA GDP and you bring Nigeria GDP, you bring USA per capita income and you bring Nigeria per capita income. With with that knowledge, you can compare between Nigeria and USA which country is better, because USA they have a very high per capita income. USA is also a high what national income. Look at Cuba. If you bring Cuba statistics and you bring Nigeria statistics, Cuba have a very high national income compared to Nigeria. It implies that Cuba have a more economic strength than what Nigeria. So what it simply mean with the national income accounting, like the GDP, information of GDP, per capita income, they can tell which country has a better economic strength. Also, national income accounting give us the knowledge of the overall economic performance of a country. It gives us a knowledge of the overall economic performance of a country. The national income statistic is used as a tool and yardstick to determine the economic performance of a nation in an accounting year. The national income accounting information can use to determine the performance of Nigeria in a certain year. Like in the year 2015, before the general election, Nigeria had the largest GDP in Africa. So we can say that Nigeria economic performance is very high. Now look at recently, 2020, Nigeria GDP has dropped. What does this imply? That there's a fall in the our economic performance. So with our GDP and our national income, we can tell how is the country faring economically. Is the economy growing or falling? If the GDP reduce, let's say by 2%, we see that Nigeria economy has reduced or fall by 2%. If the GDP increased by 4%, we can see that Nigeria economy has grown by 4%. That is the use of the national income accounting. We use that to know the overall economic performance of a nation. Another use of the national income accounting is to compare the standard of living of a country with another country. To compare the standard of living. Look at this man here. He's looking tattered, and his dog is looking so malnourished, looking famished. Look at this man, is like have a high standard of living. What the national income actually does, with the knowledge of the per capita income, we can compare two countries. Which country citizens living larger than the other? Which country have a high standard of living as relates to other? Cuba has a very high standard of living compared to Nigeria, because Cuba per capita income is very high, while that of Nigeria is low. So when we compare these two, we can know that which country have a high standard of living, which country populace are living better than the other. So that is one of the importance of national income accounting. If you want to know between Nigerians and Ghanaians, which person are living larger, which person have a high standard of living, what you simply do, compare the per capita income between the both countries. You can know which country is living better, and also take into consideration the income inequality. When we proceed, we look at the Lawrence curve, talk about the disparity in income. So that's beyond your level. Now when we proceed, look at the Lawrence curve. So with the comparison of standard of living can be done through our per capita income, to know which country is living better than the other. So that's all for today. Today we have looked at the basic concept of national income. Talk about the GDP, the GNP, the gross domestic product, the net domestic product, the gross national product, the net national product. We also look at per capita income.